Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Strong earnings from the U.S. financial sector put a bounce in the New York exchanges. Toronto did terrifically well. Ross also takes a look at uranium, the transports, and the U.S. and Canadian dollars. John Rubino from dollarcollapse.com comments on China's Evergrande crisis, the possibility the Fed is about to taper, and the outlook for battery metals. Market historian Bob Hoye from chartsandmarkets.com answers listener questions and talks about the surge in U.S. IPOs, American banks seeing fewer loan customers, and the surging demand for private jets. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. He's speaking to us from the Vancouver area. Welcome back to This Week in Money.
It's good to be with you from the wet Vancouver area.
Well, we do call it the wet coast quite often.
Yes, yeah.
Taking a look at the big markets, we've had strong earnings reports. Has that perked up the stock markets on both sides of the U.S.-Canadian border?
It certainly has. So this is just the beginning of the earnings season. And, we start off with the financials on the U.S. side. So we talked about how the rotation recently had been in favor of the financials. And we take a look here, the XLF. So that's J.P. Morgan, Bank of America, Goldman Sachs, Brookfield, all the nice big names there. They've taken that index to new highs, and there's no reason to think that that's not going to continue on for quite a while. On the Canadian side, it's been energies and financials here that also provided life. And as far as I think for indices, this is the only North American index to close at a new all-time high. You've got the Shopifys in there that are doing extremely well and helping out, but even the Canadian banks, which won't be reporting for a few more weeks, they're on the late side. They're providing a decent support. And then there's that item called crude oil, and here we sit at $82 to close off the week. Interestingly enough, there are not too many bulls out there when you look at the commitment of traders numbers. So for all that the price might be starting to show a little bit of excesses, the momentum has not got out of hand. The commitments are not getting out of hand. So clearly this, from my perspective, still has room to run. And the stocks, as we pointed out in that sector, they're doing the best pretty much of everything. The moves from the middle of August just been phenomenal, and you're getting to the point now where a few of the stocks are talking about buybacks and possible increases in dividends. So good news as far as that side of the Canadian market is concerned.
Transports, are they picking up?
Yes, the transport index had really been the dog in the spring and into the summer. And when you take a look at the recovery, it's made back about 60% off the lows right now. And some of the key names in there have really been doing quite nicely. We had some good oversold signals, and this bounce at up 60% right now probably due for a bit of a pause in here. We will have to watch very carefully the lows that have been put in the last month or so, because when you're looking at Dow theory, you want to be looking at the industrials and the transports, and if they both take out a support level, then you consider that to be a sell signal. If only one does, then you don't have any corroboration there. But with the correction that we've had in July, August, both the industrials and the transports, we've got good support levels there, and we've now rallied. So the levels that were put in on this correction have to be watched very, very carefully.
What's going on with the U.S. and Canadian dollars?
The U.S. dollar has just been biding its time here for the last week or so. Got up to some, pretty good resistance levels in that 94 to 94.5 level. Spent the better part now of, I guess it's over a full month, sitting in that trading range. And considering the extent of the rally from 92 up to 94.5, it's a natural spot to see a bit of pause. The 20 and 50 week moving averages have crossed to the upside, so that's a good signal. And, if we look back to 2018 or 2016 when the same things happened, you get that initial surge for 4 or 5 weeks. You get a pause like we're having right now. And then as long as the corrections manage to hold above those averages, and right now that would be around 92 3/4 on the index. As long as they hold that during pullback, then you can deem the dollar to still be in an uptrend. And the rally in 2016 took the better part of 8 to 10 months. The one in 2018 was the better part of 2 full years on the upside. So this one is still pretty much in its infancy from what I can see. And on the Canadian dollar, we had no bullish divergences at the bottom, which can be very, very helpful. But in this case, what you had was the strength in the commodities, and that was the DBA, the agricultural commodities, along with the crude oil market and natural gas. The strength there was enough to finally get the Canadian dollar to take out a key resistance level. And so, you look for this one to continue along until you see a divergence. And as of this week, I think we had 4 out of 5 consecutive days on the upside. Little pause. We've probably given back or made back half of the losses since the May-June high. So you could have a little pause here, but trend is back up. And it's a favorable trend, so don't look at fading that one yet.
Bitcoin, now people are calling it, of course, some are still wondering if it's real or not. Well, when it's around 60 grand, something's real there. And some people think it might surge much higher because the Securities Commission in the U.S. may approve ETFs trading in cryptocurrencies.
Yes, that appears to be just around the corner. The probability of some ETFs being listed before the end of this month are exceptionally high. They found a means in which to go through the regulatory process to create these listings, and this will probably be like you think about the cannabis stocks when we first started to get wider acceptance on those, and then everybody gets on board for a while and gets really excited. Well, we've had various groups of investors come in, and we've had maybe 3 big runs in Bitcoin over the last few years. The last one into March of this year, and then that was 60,000, 64,000. We corrected back to 28, and now we're right back at 61,000 this Friday. Odds are, if you get the ETFs listed, that's going to create a whole new inflow of cash into the sector and probably produce another pretty big run. It's not for the faint-hearted, because this thing, each one of the various coins, and there are dozens of them out there, are pretty darn volatile. So when they're running, enjoy the run, but don't overcommit as things get excited. We tend to look for our exhaustion models when both of our short-term oscillator and our intermediate oscillator become overextended and into an exhaustion phase. You want to be looking to take money off the table, because invariably you'll get corrections, and you want to take advantage of those. And speaking of that type of thing, we had this great run in uraniums the previous few weeks, and then they started to go into a bit of a correction. And so the first pullback was to the 20-day moving average. And as we told people, if you get a second correction a little deeper, closer to the 50-day, and correct back to the August highs, that would be a really good buying opportunity. That's exactly what happened. So all you needed was the patience to sit back and wait for the opportunity to come to you rather than chasing the market. And this week, we got life again in the uraniums, and a lot of them are right back at the highs that we saw the better part of 3 or 4 weeks ago. So, from an investor's point of view, buy the dips. From a trader's point of view, buy the dips, but remember to take some money off the table in the good times.
Ross, thank you so much for chatting with us.
Always a pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, John Rubino, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. He's speaking to us from Washington State. Welcome back to the show, John.
Hey, Jim. Good to be back.
John, is rising inflation the new normal, or is this just a transitory inflation, as the Fed likes to call it?
Well, that is the $100 trillion question, really, because everything in the financial markets depend on which of those two scenarios plays out in the next couple of years. And right now, I've got to say, there are so many cross currents, and there's so much weighing on either side that it's hard to say with certainty. For instance, on the inflation side, in other words, sustained inflation for as far as the eye can see, you've got big increases in wages, at least in the U.S. We have a labor shortage here, which means people are having to pay up for workers. And once you build in those higher wage levels, they don't go away. So we're building in dramatically higher wage costs going forward, which is one of the big indicators that the Fed looks at to determine what real inflation is. So in that sense, we could well have sustained inflation going forward. Plus, the supply chains of the world are still screwed up, which means shortages, which means higher prices. Okay, that's the inflation side. The deflation side is that the U.S. economy seems to be slowing down dramatically. Goldman Sachs just lately cut its year-ahead GDP prediction from 6-point-something for the U.S. to 2-point-something. It was a huge drop. And most of the other GDP trackers out there are coming in with similar numbers now. We've got one called the GDP Now from the Atlanta Fed, and I think that's below 2% now. That's 1.8 or something like that. So the economy is slowing down. And you've got a massive real estate bust going on in China right now, with Evergrande, one of their big real estate developers, basically just imploding, and it's pulling down all the other real estate companies. And as you know, in Canada, the Chinese love their real estate, and something like 72% of the Chinese household capital right now, Chinese household assets, are tied up in real estate, which is outrageously high number. It's something like 30% in the U.S. So it's 2.5 times almost as concentrated China is than the U.S. is in real estate. So if their real estate sector implodes, that takes the whole economy down, which is massively deflationary. Now, you got those two things out there, the inflation things and the deflation things, and they're both very powerful forces. And there's no way to know which is going to dominate, if either dominates, in the next few years. So I really don't know. Right now, inflation in the U.S. is running at crisis levels, 5 or 6%. That would be the kind of thing that would usually, in past times, cause the Fed to just hit the brakes hard, raise interest rates dramatically and scale back any kind of asset purchases that were going on. But we're not seeing that yet. So anyhow, complicated story, fascinating to watch. We just have to see how it plays out.
With the labor shortage, one of the problems, a shortage of truck drivers, maybe people don't want to be a trucker because they've heard all the stories that AI is going to be driving trucks in 3 to 5 years.
Yeah, which it probably will. But, in the meantime, if you want to be a truck driver, you can make very serious money. There was one place, I don't remember the details here. I just saw the headline, but one trucking company was offering $14,000 a month to get new drivers because they just can't find the people to deliver the stuff that needs to be delivered by truck. It could be that people don't want to train to be a truck driver expecting that business to go away in a few years. So that could be one of the reasons, but there are shortages all over the place. And you resolve a shortage of labor by paying more money to try to steal people from other companies. And that builds on itself. And that's what we're seeing in the U.S. I don't know what it's like up there in Canada, but here you got for sale or help wanted signs everywhere and rising wages, which is, in one sense it's about time that people who work for a living started getting back some of the wealth that has been siphoned off by the guys who own the capital. But we'll see, how long it lasts and what it evolves into from here. Because what is happening today is clearly unsustainable.
Mm-hmm. Well, a local trucking firm that vacuums out sewer systems and so on, they're offering a $3,000 signing bonus. So, yeah.
Stuff like that is very common now.
Moving on here, do you think precious metals are going to make a comeback? Well,
they had a pretty dramatic correction just lately, and now they're starting to claw their way back. Gold is almost up to $1,800 an ounce U.S., which is kind of where it's been sitting with a little bit of a bounce around that level for quite a while now. So we're still range-bound in precious metals, basically. But inflation doing what it's doing. See, I think the thing that precious metals will need to really take off will be for the Fed to realize that it cannot taper from here. In other words, it can't tighten monetary policy. It can't raise interest rates. It can't scale back its asset purchases. And it's just going to have to give up on that whole idea. And the day the Fed admits that is the day that safe haven assets and inflation hedges, which gold and silver qualify as both of those things, just take off. And that day is not far away because the Fed is threatening to taper here pretty soon. And when we get the taper tantrum that inevitably comes from the Fed trying to tighten monetary policy, and the Fed caves and completely backs off the concept, then it's easy money as far as the eye can see. No reason not to own gold and silver, and those things will take off.
Southwest Airlines had to cancel a lot of flights lately. Is this a work slowdown by unvaxxed employees or something else?
Well, we just got done talking about a labor shortage. So when a company has a shortage of people and has to scale back its business, you would normally think that it's part of that story. But there's more to it here, apparently. And that is that, Southwest was going to implement the vaccine mandate that the U.S. is playing around with, where they were going to fire anybody who wasn't vaccinated at some near date in the future. And a lot of people, it sounds like, at that company are just, they're calling in sick to get rid of all their sick days, and they're taking vacation now so they can use up their vacation days just in case they get fired and they lose some of those accrued days. And so you're seeing them not have enough pilots, not have enough flight attendants or probably maintenance people, and having to cancel a lot of flights, which for an airline is just a nightmare because, you generate, besides just losing money, you generate really bad consumer experiences that stay with people. If your Southwest flight gets canceled and you are stuck in some hotel halfway across the country and there's nothing you can do for a couple of days until you get a new flight, you're going to remember it was Southwest that did that to you. So it really is a bad business practice to cancel a lot of flights like that, and they don't want to do it. So now they just came out and said, well, we're not going to fire anybody over this vaccine thing. They're trying to get their people to come back to work. And this illustrates a broader trend, at least in the U.S., where people are really fed up with this. I would guess that 60% of Americans buy into the whole vaccine is a good thing, vaccination is a good thing, and vaccine mandates may be necessary. We'll just, we'll do it. We'll comply with it. The government should impose it. And then 40% of the population thinks it's just crazy, an absolutely horrendous idea that violates the Constitution and common sense and every other positive thing you can think of. And they're just not going to go along with it. So we're entering a period of civil disobedience in some sectors where people are just not going to do it, and they're going to lose their jobs if they have to. And a lot of industries they're already faced with fairly dramatic labor shortages, and now it's just going to get that much worse. So we might have a whole country of Southwest Airs here pretty soon while we work this thing out politically.
I also heard a lot of airlines didn't want to put on extra equipment because they're scared there could be a fifth wave and their flights will all be canceled. So why bring back staff and equipment if you're just going to have to lay it off again? So they're short to start with.
That's part of it.
Yeah.
Yeah, because we keep having these new kinds of coronavirus come along. And if we've had several, there's no reason why we can't have another one. And probably every business out there has incorporated that possibility into their planning. But you know what? If you're an airline, you need to fly the scheduled flights. And if you scheduled those flights, then that means you intended to fly them, and you absolutely need to do it. So, and that's true of a lot of other industries where, if you're selling stuff, you got to be able to deliver. If you can't deliver, it would have been better just never to open that factory if you're only going to run it at half speed and stiff a lot of people on their orders, and that's kind of what a lot of companies are looking at. So, and you probably saw the story in New York State. They did a vaccine mandate, and they fired something like 70,000 healthcare workers, which led to massive staffing shortages in their hospital. And now they're calling in the National Guard to take care of patients and stuff. So, things like that are happening around the U.S. We are not a very well-run country anymore, and this is just laying that fact bare for everybody to see.
The European energy crisis all started when the windmills they were relying on were becalmed, and they didn't have enough natural gas or coal or diesel to fire up their power systems. They had blackouts in the UK. A lack of truck drivers apparently has led to 90% of their petrol stations, as they call them, being out of fuel. Could such a thing happen here if we decide that we're suddenly just going to switch to solar and wind power overnight and not have a backup system in place just in case the wind decides not to blow?
Yeah, well, California is already seeing some stuff like that, where they're having European-style issues with their electricity grid, and yeah, there's no reason why it can't happen in other places. And okay, a couple of things. One is that this is sort of the normal growing pains when you are transitioning from one system to another, because you can't know ahead of time exactly how you've got to set up the mix of solar and wind and hydropower and nuclear and coal and oil and gas. It's a very hard logistical problem. And there's no surprise that when some exogenous factor changes, like the pandemic or a sudden change in wind speed, or big fires which put a lot of smoke in the air, which affect how solar power works. When something like that changes, you're going to have problems. Having said that, we still are going to make that transition. We're going to transition to renewable energy over time at some rate, and in some year it will go over 50-50, and then in some year after that it'll be 90%. That's absolutely going to happen. But we shouldn't expect there to be no growing pains on the way, because it's really a problem that can't be perfectly planned for. And I think wind might have some special problems there, because wind was never a very attractive alternative energy source because it's such an engineering challenge. I mean, these are big physical things that you're building, and that at some point you've got to tear back down and move away, and it's just really expensive and high maintenance. And I think solar is vastly better than wind. And solar, of course, only works in the daytime, so you need really cheap, efficient batteries. So that's really the key to solar just taking over. We have to have batteries, some kind of a storage mechanism for daytime energy that can then be drawn upon at night. That's coming too. Batteries get cheaper every year. There will come a time when they're so cheap that combined solar and batteries will be by far the cheapest energy source out there, and nothing else will make any sense anymore in most places.
Yeah, well, here in Vancouver, and you're finding out in Washington State, once you hit late September, it's going to be cloudy and rainy for the next 5 months. And I have a lot of solar-powered little devices on my balcony, and I can tell you, on a cloudy or rainy day, they don't last long.
Yeah, so solar is not for everywhere.
Yeah.
But for most of the country, or most of the U.S., I don't know what sunlight levels are like in most of Canada, probably somewhat less than in the U.S. because you're up north. But in most of the U.S., a southern-facing roof will generate enough energy from solar panels to be a pretty good deal. Okay, it's not the very cheapest thing you can do yet, but let solar drop in price by another 50%, which it will in the coming decade, and then, it'll be a really good deal almost anywhere with a solar-facing roof. But it will be a good deal later in places that are cloudier. So the Pacific Northwest is not the best bet. But for most of the world, solar is going to be the dominant energy source at some point, possibly in our lifetimes, definitely in our kids' lifetimes.
Looking at the U.S. Politically, Texas doesn't like to answer to anybody. Their power grid is not connected to the rest of the union, and they had the deep freeze, and then they ended up paying sky-high prices. Do you need a federally coordinated system if you're going to ease your way into alternative, sustainable energy for electricity and so on? Plus, I've heard studies that say we'll need a 100% increase in the power generating grid itself, the power generation and the grid, if we're going to turn to electric cars.
Well, we're electrifying the world. So if we go from gas-powered cars, which we are totally going to do, to electric-powered cars, then we need that much more electricity. So we should go straight into the investment thesis from there, really, because you want to buy the components of an electrified world, which means copper and zinc and nickel and to an extent silver, because those things are going to be needed in quantities that are just breathtaking compared to today's output. So, a copper mine is a great thing to own in a world that's going electric. But, of course, that creates a lot of challenges because we're already, like you said, having trouble with our electrical grids in a lot of places. But the solution in a lot of cases is decentralizing, not centralizing it. The federal government doesn't need to get involved in this. They just need to let states who screw up their power grids pay the price. And then all the other states look at whatever happened in Texas, say, or California, and they say, we better take steps to avoid that. We don't want to be the next Texas. And so they learn from Texas's mistakes and take the steps they need to take. It's basic decentralized economics, and that's how it works. The electric car thing is I think fascinating. I don't know that batteries are going to be the thing that drives them. We might end up with fuel cell electric cars, but that's to be seen as those two technologies kind of duke it out, because we're still seeing electric cars blow up more often than they ought to, or at least catch on fire, and that needs to be fixed before this becomes a totally mainstream technology.
What do rising oil prices mean for the gold and silver mining people?
Well, it's funny. Rising energy costs, especially oil, are kind of a good news, bad news thing for precious metals. Because on the one hand, oil feeds directly into the consumer price index. It makes everything more expensive, and rising inflation is traditionally good for precious metals. So that's the good side. The bad side for the miners is that it's an energy-intensive business. Getting an ounce of gold out of the ground by processing a ton of rock is very energy-intensive. And that raises the costs to the miners when they have to pay more for diesel fuel for their big earth-moving machines. And lowers the profits that they make from taking gold out of the ground. So you get, a higher gold price, other things being equal, but also higher costs. So the question is, which one of those things is more important going forward to the profitability of the gold miners? And I would say right now that, $1,800 per ounce gold is a very profitable level for most of the miners. However, $80 oil is more expensive than it was a year ago when it was like $60, which means their costs are going up too. So we'll see. I think on balance it's still a good time to be a gold miner, but it's not quite as good as it was 6 months or a year ago.
John, is there anything else that's kind of boiling on the back burner here that you think maybe most people aren't aware of, but maybe they should be?
Well, two things. One is that, the whole creeping fascism thing. We're imposing on citizens' rights and using the pandemic as an excuse. But it looks to me more like just an excuse, and we're going authoritarian, and we really have to deal with that. We've really got to stop this and turn the trend around if we want to have any personal freedom at all. You've got, in the U.S., the federal government now proposing that they're going to have the banks track every transaction over $600 in everybody's bank accounts. So that's how we avoid, or how we stop tax avoidance among the rich, right? By watching over every single person's bank account for transactions of $600. This is bad. And the other thing that spooks me right now is geopolitics. We're on the verge of conflicts out there in ways that are potentially catastrophic. I think China right now is looking at the U.S., watching our seeming incompetence when it comes to Afghanistan, how we just kind of blundered out of the country and let a horrible thing happen, when we definitely should have left, or we should have left in a different way that wasn't humiliating to all involved. They're looking at that and thinking, wow, maybe we can take Taiwan back. Maybe this is our opportunity to do that. And so they're making noises like they're getting ready to, one way or another, bully Taiwan into becoming part of China, just like what happened with Hong Kong lately. And the U.S. is kind of obligated to protect Taiwan, although, it wouldn't surprise me if 99.9% of Americans could not find Taiwan on a map and wouldn't be able to tell you why we should care. But the government seems to care, and my fear is that they blunder into something with China, in China's backyard, that turns into a shooting war where whoever loses the first skirmish feels the need to escalate in order to have a victory, and then so on until you start spinning out of control. And the weapons we have now are just terrifying. So we would be trying a lot of new weapons. I just posted a thing on Dollar Collapse about the robots that they're building for the battlefield. They look like dogs. They call them robo-dogs. But they're basically, stronger, faster than a human, obviously. And now they're mounting sniper rifles on the back of them. They've got one that, it can run around out on the battlefield and kind of hang out wherever it wants to. And it's got a gun on its back that is accurate up to a kilometer away. So, we're introducing stuff like that to the battlefield. And pretty soon they'll be autonomous. If we have self-driving cars, it's reasonable to assume that when you get to the military grade level of that kind of AI, you got autonomous robots on the battlefield. So that kind of world terrifies me. It's easy to envision a financial crisis that we get through, and that the people who call the crisis correctly make a lot of money from. And so that's, that's usually my beat as a reporter, and that's mildly scary, but manageable and even possibly positive. There's no positive thing that comes from a war between the U.S. and China, or the U.S. and Russia, or the U.S. versus China, Russia, and Iran, or something like that. And Canadians should not like that prospect either, because you will get sucked into that one way or another, and it won't be pleasant. That's a guarantee.
John, thank you so much for chatting with us.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Coming up, Bob Hoye, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Bob, welcome back to This Week in Money.
Yeah, here we are, Jim, on our get together, and the weather is very gloomy in Vancouver, but the financial markets seem very upbeat.
I know you like to answer our listener questions, so we'll kick off our show by answering 3 questions today. The first one comes from Ernie. He asks, indications are that green industries will have access to lower costs of capital. Gold and silver mining is not considered green and is a heavy user of non-green input costs. How does this impact your forecast of lower real costs being the basis for high profitability for this sector?
Yeah, Ernie, good question. There are favored industries out there that get all kinds of blessings, and if you look at power sources, uneconomic and interruptible and useless, but it's being imposed upon everybody. But what one wants to understand is that during the financial mania, which is still on, at least the last few days, and you've got some straight up action in aluminum, and crude and natural gas have been firm, so this is quite the party. But what happens is that it's after the party is over. So the real price of gold has been essentially declining since the boom year of 2011. But you can say that over the last 6 months or so, it could be attempting to base. And the gold's real price doesn't go up until the huge financial party is over. And that's then when most everything falls relative to gold, and it restores profitability to the gold mining industry. And I just did some work on that yesterday, and like from our buy for gold sector in November of 2018, we expected not just the gold shares to go up, but the gold shares would outperform the S&P, and that prevailed until last July, a year ago July, when the whole sector became overbought. But the GDXJ did outperform the S&P by 2.2 times. It was terrific. And then we called for the correction, and on our work, the correction in gold stocks was likely to continue into November, or getting here close soon somewhere. So we're looking for a technical buy on the gold stocks somewhere over the next 5 or 6 weeks. But good question. But the point is, Ernie, it's that gold mining suffers during a bubble and makes money after the bubble is over.
A question from Justin in Berkeley, California, and it turns out, Bob, he's a real big fan of yours. He says, as a subscriber to Charts and Markets with my investment group, when Ross Clark said Kemetco was at rock bottom, I jumped all over it. Wow, am I happy. Then when Ross said the pullback was a good buying opportunity, I jumped all over that. My question for Bob is, what's his feeling about nuclear energy as a bridge energy to unicorn green energy? Does Bob think the traditional green energies are hit and miss? Thanks.
Yeah.
Justin in Berkeley.
Sure, Justin. That's a good outline. The use of, or let's put it this way, the imposition of wind power and solar power is, and always has been, a losing proposition for two reasons. It's intermittent, and also it is inefficient. It is a low-density form of energy, so it can never become economic. They've forced it upon everybody. But there are, of course, the fossil fuels, which are intense or dense sources of electricity: coal, heating oil, natural gas, outstanding items, and particularly over the last few years, natural gas-fired electrical generators have been terrific. And then the other one, which you point out, is nuclear energy, and it's practical because it's a high density source of energy, and nowadays plants can be made of rather a modest size and close to where the electricity is going to be used, so you don't have to have miles and miles of power lines from deserts into the city. So I'm positive on the nuclear side. It unfortunately suffers a great deal of superstition from the left, who became energized after the Second World War on anti-nuclear bomb movements. This was a wonderful feel-good stuff. And then their superstitions about nuclear power, it was just an extension from their superstition, concerns about nuclear bombs. But I think that the engineering on nuclear is now very sound, very efficient, and usable night and day. And once the bad press against nuclear is finally shoved out the window, the nuclear electrical generation will become a reliable and important source of electricity.
Our third question comes from Michael. Hi, Jim and Bob. The technical experts are calling for this bounce in the markets to keep flying to new all-time highs into next year, but black swans seem to be gathering on the horizon and nobody seems to be taking notice. This market reminds me of the quiet town in Alfred Hitchcock's movie The Birds, just before the arrival of some very angry birds. Bob, what does nature have in store for these markets over the coming weeks?
Yeah, good question. Looking back in sort of August, many people, including ourselves, were talking about the probability of a severe correction in the fall, and I think there were so many in the story that it not happened. But to tell the truth is that you've had an extraordinary rally in crude oil and natural gas and aluminum, of all things, and straight up stuff. But the way we look at it, it is that it's a rotation that got going here with earlier. You had lumber straight up, you had corn, soybeans straight up, and these all reached technical excesses and got hit. So this is another set. Now also, because of the energy shutdowns that environmentalists have forced upon so many countries, Europe and Northern Europe and England are tragedies. So you have now a very sharp rally in crude oil. Natural gas may have reached excesses, but now in crude oil, our old seasonals from years ago, you could have a rally for crude oil into early October. This is still going. So we got excesses on natural gas, and a correction has started, and we're watching for excesses in the others. Aluminum keeps going straight up, but it has put speculators back into the stock markets again, and they've been acting rather well. You even got the advanced decline line in the last 2 days going straight up to new highs. So the bulls are back in charge, and we'll just see how long this can run. So
we also have a second question from Michael. The uranium sector seems to be really taking off of late. Should we buy now or wait for a correction in the overall market?
We kind of wait for a correction on that. I have a problem buying straight up things. But as an earlier question, Justin pointed out that Ross got the buy on the uraniums nicely timed, and the chart pattern for the uraniums is had a terrific rally, but it's within a longer-term pattern that maybe an even bigger move is possible. But we'll wait for the next buying opportunity on it. But as I said, I can't stand buying things that are going straight up. But it's been fascinating, and I think the whole street is wild about the return of 1970s inflation. And our work on this is that we are in inflation in financial assets, that typically a great financial bubble will have a strong economy in the final stages of it, and with the strong business activity, commodity prices will go up. So, like for example, at previous great financial bubbles, 1929, 1873, for example, one of the signatures in the final year or so is copper's real price going up, which it is. The other is the real long interest rates adjusted for inflation going down, which it has done. And then the other is gold's real price as deflated by inflation goes down. So while the popular cry now is that this is just the start of a 1970s inflation, our work is fairly decided that this is the real inflation out there is in financial assets. And as we've seen in 1929 or 1873 or previous ones, when the bubble in financial assets gets really over, the climax, the crash, and everything else, then all hot asset prices decline. So that once this mania is over here in the next month or so, we think that stock and bond prices will decline, and most of the latest hot commodities will decline as well. And within this, gold's real price will go up, and that then sets up a multi-year bull market for the gold sector. So I think we just have to be patient here.
Bob, we now move on to some interesting headlines you found for us for today. The first one is weeks of stock market volatility have done little to dent the record-setting pace of U.S. initial public offerings.
Yeah, it's a terrific new issue market. They're coming to the market with everything. Now, also, Jim, this was part of an article that globally there's been, year to date, there's been more than 2,000 IPOs, and it's raised over $400 billion globally. So the number of new issues globally and the amount of money raised or both records. So this is, hey, they're not doing new issues of copper. This is new issues of stocks, which is the financial party. And it's been huge and immense and wonderful to watch. And it'd be fascinating to watch as it rolls over.
Another headline that caught your attention: lending at U.S. banks drops to new low as cash hoards rise.
Yeah, that was a surprise one for me. I don't look at this number or this chart regularly, and it was actually the headline that got my eye, and I thought, oh, because one of the things that the Austrian school, von Mises, got right on the business cycle, the credit market cycle, is that at the top of a boom, you don't have to have the banks suddenly switch to calling in loans. All you have to do is get them a bit nervous and stop making them. It's a symptom of a top. So this headline is, for me, a symptom of a top. Some banks are getting a little cautious and starting to look to their own balance sheets and building some cash for, I guess, a rainy day.
Another headline here: private jet demand soars as plane makers enter boom times. A lot of new millionaires and billionaires out there, or have they decided they'd rather travel privately than with the unwashed masses?
I guess that's it. But no, I guess there's so many people and companies and everything making so much money that they all got to have their private airplane. So, hey, if you got your own private airplane, you can decide whether you have to wear a mask or not, I suppose. But, and again, it's another one of these, it's a boom, definitely a boom headline, where the rage is now is you got to have your private airplane, and more power to them. We'll see what happens with it, but and then also, like, Vancouver here is a hot spot for Lamborghinis and Ferraris, all of the high performance cars, even the McLarens, and they sell more of these cars in Vancouver than in I think even in Florida and places like that. So it's where you have very wealthy Asian people come in, buy the grand house, and then buy a few Ferraris and Lamborghinis because it's the stylish thing to do. So you're seeing exceptionally behavior with airplanes, very high-priced cars, and anything. It really, Jim, it's really party time out there. And we've been measuring the excesses. Like, you've had sectors register excesses and technical excesses. And here's the trick to it, Jim, is that in a methodically rising stock market, if you don't get excesses, the trend is methodical and continues up. Now, what we've had is we're getting excesses that you usually only see at or near previous cyclical highs. So while it's, as I say, you've got aluminum and natural gas and crude oil lately straight up, and you've also got steel and lithium straight up, but you got the earlier items that were straight up, and like, for example, iron ore. You had to have iron ore earlier in the year, but it went straight up to May and has declined hugely. And even lumber was a fabulous straight up from the low in 2020 at $275. It soared into the 1700s in May, as we pointed out then, the excesses, and then also that you can have a seasonal high for lumber in June, so close enough. And then it corrected all the way down to 500s. So this is the rotation that's going on. So again, when you've got things going straight up, you can't tell whether the straight up continues for a week, 2 weeks, 3 weeks, or 4 weeks, but you know that at some point the straight up exhausts the speculators, and then you have the correction comes in. So, Jim, we are in particularly fascinating financial markets.
Nothing makes me more nervous on the streets of Vancouver than seeing some pimply-faced kid behind the wheel of a lime green Lamborghini with a beginner's driver's sticker on it.
Oh, that is scary. I've had some fairly fast cars in my day, but it was a progress from a Model A Ford when I was in high school with 40 horsepower, and then sports cars, Austin Healey's, Alfa Romeos, all this sort of stuff, and tuned up with higher performance engines, so some of them were fairly quick cars, and then spent some time road racing, sports car racing out at Westwood and Seattle and things like that, so I have a fair amount of experience in driving fast cars, either on the road racing track or on back roads at huge speeds. But we of our elderly age, we grew into high performance cars, whereas now, as you point out, you got a young guy, 17 years old, and he's driving a Lamborghini that'll go from 0 to 60 in 3.8 seconds and speeds up to 170 miles an hour. It's trouble. I'm convinced they don't have a chance to grow into high performance cars. They suddenly have one. So it's highly dangerous combination.
Yeah, I think there should be an age limit and training provided if you have over so many horsepower under the hood.
Yeah. Track time. For sure. Get in some track time with a high performance car is a lot of fun. And it also gives you the feeling for the handling that's required and things like that. So, because out here at Marine Drive, last month there was a high-performance car got out of control on the windy part of Marine Drive and hit the sidewalk and killed 2 students that were walking along the sidewalk. Just like that, gone, with some high-performance car getting out of control.
It also reminds me, this is in aviation, but the same thing. Thurman Munson, the New York Yankee catcher, learned to fly on a Cessna 172. Top end, I think, is 120 miles an hour. And Cessna convinced him to buy a corporate jet, and he crashed it because he just wasn't used to handling that kind of power.
Yeah. There are stories out there. Jim, we're talking wild action in financial markets.
And we're seeing what it can cause on the ground.
Commodities.
Yeah.
Wild action in politics and wild action in personal decisions on cars. It's the whole world has gone wild.
Another headline that we'll wrap up the show with: the Turkish lira hits a record low. And what's behind that, and should it be a concern to the rest of us?
Yeah, these don't seem big at the time, but in a bubble year or a great cyclical bull market year, often the troubles can appear in lesser countries, and this first appeared in March with South Africa, Turkey, and Argentina. Their central banks suddenly ran out of liquidity, and then you have their currency getting trashed and their short rates going up and then of course China is not a lesser country, it's a huge country, and it is in a credit crisis. And then this week there was the headline about another problem in Turkey. And the work I've done historically is that when you get these sudden failures in outlying financial exchanges, they inevitably work their way into New York or London, which are the senior financial exchanges. And, Jim, there's a long history behind this because the Roman writer Cicero wrote 2,000 years ago that when you had a financial problem in the eastern provinces, meaning Phoenicia and whatnot, or Egypt, at the eastern end of the Mediterranean, Cicero observed that inevitably it would hit the financial center in Rome. And I think this is what's going on now. So once the action in hot commodities now is over, I think the next phase of serious decline is possible.
Bob, thank you so much for being on This Week in Money.
Jim, good to be with you, and look forward to next week.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, John Rubino, Bob Hoye, And thank you for listening. If you have any questions for our guests or our show, you can send them to info@howestreet.com. As you heard, Bob loves to answer your questions, so please send them in. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, thanks, Jim.
Larry, has news been good for your investors lately?
Oh, it's been a rocky ride, for sure. I mean, ever since we announced the $20 million placement with the institutions in the U.S., the stock had dropped down as much as 30% today, but bounced back today, and so we're down less than 20% now. So that's a good thing. I'm thinking that maybe this is the bottom. Somewhere along the line, people with deep pockets would start looking at the price and figuring it's a bargain. I mean, the institutions thought it was a bargain at $1. I'm sure that they think this price is a real bargain. So, yeah, it's. I'm hoping that those dark days are behind us, and but you never know. And but it's looking a hell of a lot better today, Jim, than it did this morning, for example, when it was down as low as 71 cents. So, an 82 close is pretty damn good in my books, and that's a nice rally in the stock, and it did it on a fair decent volume. So, yeah, we traded about 9.5 million shares on both exchanges today. And as a matter of fact, if you look at the entire picture, we've traded, 68 million shares since announcement on September 29th of the private placement. So that's a lot of paper changing hands, and I won't bother going into what I think was happening, because I've got a few shareholders that think that is negative for the stock. But I don't like to hold things back from the overall shareholders on what's happening in the market. So it's I'll move on to other areas. We just completed a long day with Kemetco yesterday on doing some strategizing and optimizing, and so hopefully we'll have a bit of a timetable for him next week. I'm not into timelines. I used to do timelines at one time, but things have totally changed in the market. You don't know what COVID is going to do to you, and it certainly has slowed us down. And so timelines are just goals that you can't meet and you can't predict, and so better off to just have an overall timeline. And the next step is the beginning of the demonstration plant work, and after that, with all that information that's gathered, we'll be able to put the design down and the actual estimation of the costs of a commercial plant. So I'm happy with the progress that's being made. That we had some setbacks, and that's only on time. And but we've never had a setback on our reporting of the results. I noticed the latest blather out there is that our results are all the same, but they're not by any chance. That nobody else is reporting any recovery of lithium, and yet we're way up at the top on that. And So, it's people have to look at what we have, and then they have to judge whether the stock is worth holding. Do their own due diligence. Don't go to the bull boards or the CEO boards and do the due diligence out there, because that's all just negative blather about the company and the management. And I'm about losing my voice here, Jim. Been doing a lot of talking over the last few days. I get a lot of calls as the market kind of slid off over the edge there, and it came back today, which made me extremely happy. And but you start to lose your voice the more you talk. And I think we'll have some good press releases next week. Basically on the demonstration plant. I know everybody's been waiting for that, and we can give them an update. But the reality is that things have been slowed down quite a bit on getting the pieces that we needed for the demonstration plant, and so we'll have some timelines on that, because we paid for 75% of it. So anyway, it's coming up to the weekend. Everybody should be slightly happier. I mean, it's not $1, but it is 81 or 82 cents on the close, and that certainly is better than it was this morning, and it shows a turnaround in the market. Let's hope that this turnaround is here to stay, because we've attracted people with very deep pockets into this company, and that's the institutions that bought the placement. And if I were them, I would be looking at saying, hey, it was a good buy at $1. It's a better buy at 80 cents. And, maybe step into the market and do a bit of buying. That's kind of what I'm hoping for. And so it's all about the market right now. It's you can talk to your blue in the face about your great results and everything else, but seems like the better the result, the further the stock goes down. I mean, you just have to look at the fact that now we've got 20 million in the till with a clear path to commercial production. And so, we're in great shape. And here it is, October. And I think this was the knockdown month. It was on people's schedule for us. And it looks like maybe we've turned that point. So, I'm not going to go any further because I don't want to get my voice down here to where you can't hear me. But the truth of the matter is, I think better times are ahead. And I think that you've got to look at this latest down plunge as a tempest in a teapot. I mean, there's nobody else doing anything with lithium. There's nobody else that is reporting the kinds of results that we get. And I do know that one thing, though, that you shouldn't be designing a plant or doing deals without knowing, what it's going to cost you and what your recoveries are going to be, what your purities are going to be. Then you can base a price on that. But it seems to me that companies are going ahead and talking about 100,000 tons a year production and all this stuff. And, you won't see us doing that because we just want to get that first producer out there.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that got its first start in manganese back in 2008. And we came up with, through Kemetco, we came up with a process that worked on very low grades, 2-3% manganese. As a matter of fact, our pre-feasibility showed us that we were at the same cost per ton as the Chinese were getting 30-40% manganese. And so that was a big feather in our cap, but the price of manganese went down and through the floor, and we had to put that on the shelf. But it was reenacted in 2016 when we decided to test out the cathode materials in the lithium-ion battery. and we got great results on the first start. So we've never looked back since, and we're a lot further down the line now than we were at that time. And one thing that everybody should feel comfortable is we have a solid process, we have solid work behind it, and remember that the work is arm's length to us. It's not something we do in the garage and come out with results. It's totally different. So it's kind of where the company is today. We're focusing on recycling lithium-ion batteries. We're also focusing on the production of manganese from the strategic stockpiles at Wendon for the Department of Defense, and that is being paid for by them. And so I think everybody should be happy with the progress the company's made in the last few short years, and I can tell you that I am. So, but you can also do your due diligence, not on the bull board. That's the crazy place to do due diligence. The due diligence is on our website, and if you want to go there and just see the progress reports and everything else that have been done, and you want to see the latest PowerPoint, which doesn't give times, but it gives you estimates of the next steps, it's there. It's in black and white on the site, and that is at AmericanManganeseInc.com. You can contact the company here at 778-574-4444. You can email me at LREAUGH@AMYMN.com. And I wish you all a great weekend. Oh, I better give you the symbols. The symbol for the Toronto Venture Exchange is AMY. The symbol in the U.S. QB board is AMYZF, and the symbol for Frankfurt is 2AM.
Larry, thank you so much for the update.
Thanks, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 15th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.